Okay, everybody, it's me, Gregory Mannarino. It's just lovely on this Monday, October 17, 2022. People, this is my post-market wrap up, and it's going to be just fantastic. Uh, no one said I was normal. All right, look, let's just focus on the stock market for a moment. I have a bunch of things I want to talk to you about, and I want to cover some other stuff as well. So, nice gains today for the stock market across the board. Now, if you were looking over at the debt market, you would notice an interesting phenomenon. It might confuse you. Honestly, it might confuse you. Earlier today, market rallied out of the gate. Rally continued all day long, but the 10-year yield went higher by like 7 basis points. Okay, so we have a situation here where 10-year yield rising. That means what? Debt selling off. Okay. Generally, this is not a good thing, but, did you see the dollar today? The dollar, or the relative strength of the dollar, fell over 1%. I'm really happy that this happened today because I have said for years there is a correlated relationship between relative dollar strength and the 10-year yield. And today was a classic example of that. Again, 10-year yield higher, relative strength of the dollar weaker. Okay, this is a nice thing to see in real time so you can follow these things for yourself. There absolutely is this kind of a compensatory mechanism here. Now, this doesn't mean that the trouble is over here. In fact, we got a warning today from Morgan Stanley. You know what, let me cover that real quick. So Morgan Stanley is warning that it's just not over. The sell-off in the market, the issues in the debt market, they have yet to be resolved. Now, a few things that Morgan Stanley is citing here clearly. I mean, come on, listen to this, okay? Deteriorating economic conditions. I think that requires a duh. Yeah, a few duh. Yeah, so the economy is deteriorating. I mean, really? Oh. You don't know how surprised I am to hear that. And also they're citing issues here with debt market liquidity. Oh, I'm surprised about that too. People, look, again, I love it when this stuff is getting coverage by major institutions, you know. Janet Yellen's 180 here. Oh yeah, everything's fine. Remember that? Weeks. It's fine. There's no problem. Now all of a sudden there is a problem, okay? And, she's going to the banks, going to the Wall Street banks. Do you think the Treasury should buy some debt? Is that what you would like us to do? Yeah, exactly. Come on. It's totally out of control. So anyway, I think that's very interesting here. So here we have yet a confirmation from a major Wall Street bank that yes, the economy is in free fall. It's deteriorating, and they're concerned about liquidity issues, debt market. I mean, come on. I mean, really. Now, something else I want to bring to your attention is, so we understand this issue lately with the Bank of England. What did they do? Initially started a new round of quantitative easing, decided to double that, and then subsequently end it. Yes, but there's a twist here. Here's the twist, and this is kind of an interesting look. Whatever mechanism that they got to utilize, these central banks to kind of, we're going to stop doing this, but we're going to do something else. They can't stop. They have to, if they're going to stop doing one thing, for example, like buying these gilts, okay, they have to compensate another way, and that's another reason why stocks rallied today. So what the Bank of England is going to do now is via one of their so-called repo facilities. You know, these, look, it's a scam. It's a scheme to fake liquidity. Every freaking central bank is doing it, passing vast amounts of cash back and forth to fake liquidity here. The liquidity is drying up here. We all know that. It's no secret. Ex Morgan Stanley, ex Janet Yellen now, ex the World Bank, ex the IMF. I mean, anyone who follows this blog, duh. Okay, so now the Bank of England, they're going to stop buying these gilts, but they're going to be like, temporarily increasing the use of their repo scheme via one of their facilities. Yeah, isn't that great? Look, they're going to keep this going here. That plays right into something I want to read to you, and I want you to have a copy of this, okay? I'm going to cover that in just a minute. Now, I want to throw something else out here that, look, it's more of the insanity here. So the CDC has now identified several more COVID variants. Oh, yeah, and they're responsible for the new cases that are coming out, like almost 12%. Oh, imagine my shock. You mean there's another COVID crisis? Oh, I wonder what they're going to do to us this time. How much cash are they going to have to pull into the now to develop new drugs, new vaccines, and who knows, maybe they'll force you to wear a face diaper again. I still see these imbecile people walking around with face diapers on. I laugh at every freaking one of them. They're driving around in their car by themselves. I look over and I see this person wearing a face diaper. They're alone in the car, but they're wearing their face diaper. Lovely. This is where we're going, people. Again, in a nation where you don't know, we can't even define. You and I can. We can define. But, people like Pelosi, and the president, they cannot define a man or a woman. Can't do it. They don't know how to do it. They can't even take a peek and tell. They just don't know how to do it. Anyway, that's the whole story with that. Now, what else happened today? Silver put on a nice gain. Gold, fractional gain. Bitcoin still hovering around 19.5, people, doing this for a while. Crude oil under slight pressure. The real story today with the debt market in aggregate being that fiat currency, the dollar, these are units of debt, okay, was the dollar here. So we got this compensatory mechanism here, which you witnessed for yourself. We got this story coming out of the Bank of England. Okay, don't worry, we're going to stop buying gilts, but wait till you see what we're going to do with one of our repo facilities. I love how they say that, like facility. Like, what is that, like a bathroom? Like, can I use the facilities, please? I mean, come on. They're shitting all over us, pardon my French. That's what they're doing in their facilities. Duh. Anyway, I want to read this to you, and it plays right into this new variant thing that just came out. There's several variants, by the way, and they're gonna let us know which one's worse and which one we should be afraid of. Because remember, you gotta be scared. Oh my, do I look? Let me know if does this convince you that I'm scared? Watch, ready? I'm so scared. I don't know what to do with myself. I'm frightened. Like I said when I started off, people, no one ever said this guy was normal. I'm not. But did it work? Do I look scared? Should I go to acting school? What do you think? Can someone show me how to make a scared face? I'm so scared. Anyway, I'm not scared. Laughing. So, if you are a subscriber to my free newsletter, literally free, I don't share your emails with anybody. I promise you that. I want you to open your email box, or if you are not yet subscribed to my free newsletter, hint, there is a link in the description of this video. This is an article that I wrote today, all right? And I want you to have a copy of it. Burn a copy off for yourself, share it, do whatever you want. So let me read this to you, and some of this is going to sound familiar to you, and I want to hear your comments anyway. So here we go. Expect a new debt expansion cycle to begin. All right, here we go. If central banks do not find another mechanism to continue to inflate immediately, okay, or fake liquidity, like what we're seeing with the Federal Reserve, and now we're seeing with the Bank of England, and they're all doing it. All these central banks are doing it, okay? The entire global financial system will melt down. Let me just say that again. If central banks do not find another mechanism to continue to inflate immediately, the entire global financial system will melt down. The current central bank-run financial system is 100% debt-based. You know this if you've been following this blog. What this means is a debt-based financial/economic system can only function, listen to this please, it can only function if more debt is constantly added and borrowed into existence. You know this. And the moment that this stops, the financial system in its entirety freaking implodes. It doesn't say freaking here, but I'm just kind of, adding that in. War, expanding wars, congressional acts, policies, disease processes, ding, 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 okay? Warp speed vaccines, drugs, engineered crisis after crisis, etc. are all mechanisms pushed upon an unsuspecting public to pull debt relentlessly. and exponentially into the system. Not only does the system demand that more debt be created and henceforth pulled into existence, but it must do so on an ever increasing basis just to sustain the current environment. It can't stay static. More and more has to be borrowed. Okay. The borrowing of debt into existence, okay, which is at its core demands that the currency expand, inflate, henceforth why we're not seeing any action by central banks to force the banks to increase their money holdings that they should at least be holding above zero, requirements, capital requirements, but they're at zero. Can't make that shit up if you try to. Anyway, the borrowing of debt into existence, which is at its core demands that the currency expand or inflate, is massively inflationary. You're not supposed to know that. Okay. Let me tell you something else that's inflationary. Tricking the system into thinking it's more liquid also is inflationary. These repo things that these banks are using. Currently, the world is being sold a lie. You know this, which is inflation is running rampant because rates are too low. The fact here is simple. Raising rates is meant to kill demand, not lower inflation. To lower inflation, you know this already, all the Federal Reserve or any central bank must do is contract the money supply. If in fact the Federal Reserve really wanted to lower inflation, they would increase the capital reserve requirements, what I was trying to say a minute ago, of the banks, which is currently at zero. Zero. Amazing. This would contract the money supply. The last thing, pay attention to this, please. The last thing that any central bank, especially the Federal Reserve, wants to do in this environment is contract the money supply. In fact, they want to expand it and inflate it. The power of any central bank resides in one thing. What is it? If you've been following this blog, what is it? Okay. Their ability to inflate. Period. Okay. How do you kill a central bank? You all know the answer to this one. Simple. Prevent them from issuing a single dollar of more debt. That's how you kill a central bank. Central banks will never give up their ability to inflate. It would take a full-on revolution. It would take a full-on revolution of the people against central banking to make that happen. As it stands, central banks are the most powerful organizations on the planet, none more so than the Federal Reserve, which has the full backing of the United States Armed Forces, which include its nuclear arsenal. How many times have you heard me say that? Okay. Henceforth, the petrodollar. Look it up. All right. What you and I can expect moving forward is yet again some other kind of mechanism, maybe a new disease process or multiple COVID variants, okay, which will allow the Federal Reserve to continue to inflate. One more sentence. Another disease process? Possibly. Expanding war? Some new congressional act or policy? Another crisis? Some new way to borrow and buy debt to expand this entire thing. People, I got news for you. It ain't going to stop. And the only way to stop it would be with a revolution. Are we going to get one? No. There's not enough people. There's not enough people like you and I who clearly understand what's going on. Anyway, with that said, people, I do want to hear from you. I want you to have a copy of that, like I said, link in the description of this video to my free newsletter. If you do subscribe already, check your email box. What do you think about this warning here from Morgan Stanley? It's not over. And look at come on. They're citing what you and I already know, are deteriorating economic conditions and liquidity problems in the debt market. Duh. And this Bank of England thing here. Oh, yeah, we're going to stop buying gilts. But don't worry, we're going to use one of our facilities. You know what we do in our facilities. We frolic around there. Yeah, and we fake liquidity in the market. It's just a lovely thing. All right, this guy's out of here. Please comment. Please share the video. And just one more thing. I know there's been problems over there in my chat room. Free to everybody. Free to you. I hope you're using it on my website, traderstrades.net. I'm working on it. Okay. I understand there was one individual who was banning people for no reason, creating a lot of disharmony there. Well, I corrected that problem, and I am working on it. I want this to be a nice free platform. It's free. I'll never charge for it. For all of you to, get more involved in this here. Start talking about things with other people. So please, if you haven't yet, go to my website, tradeschoice.net. There's a link. Scroll down, chat room. Have yourself a ball. Have yourself a freaking ball. I'll see you in the morning.